would there come a time when you'd have a financial product that's kind of like a REIT or a, I don't know, so many investors would be investing into your projects? Is that?
It's possible. One of the unique aspects of working in the solar industry is the solar industry is heavily dependent on the federal investment tax credit.
Mm-hmm.
And to claim the investment tax credit, you have to have you have to be a profitable business. So basically with taxable income, and looking to offset that by investing in a project that can claim the tax credit. So the majority of folks who do that are large landlords, banks, people who have a lot of what's called passive income from a tax perspective. So doctors, lawyers, people who will invest in certain types of businesses and pool their investments, they really can't access the investment tax credit. So unfortunately that limits people who would invest in that type of project.
Who provides your equipment, batteries and stuff? Chinese, Japanese?
Right now, knock on wood, we're all U.S. suppliers for the moment, and I mean, over time, certainly, you know, we look to diversify and take the best products in the market. But our inverters come out of a company up in New Jersey, and our batteries are assembled by a group out of Chicago. The cells that go into them, very few cells are actually manufactured in the U.S. So those are Japanese and Korean currently. But the final assembly and the components are currently all U.S. made.
I kind of got a question that makes no sense, but I was living in Hawaii for like almost 10 years ago, and in Oahu, it's kind of over to the north, to the east. There's like two of the from the shoot, I can't say the word. What is your job now?
What were they, windmills?
Yeah.
Hawaii's got lots of
There's like
renewable
two
energy.
of them that were. They did it like 10 years before that. It didn't even work. The thing wasn't even moving.
Power generating windmills?
Mm-hmm.
No, it didn't even. Yeah, it was all.
No, it was
broken.
on the windward side. Yeah.
But
It's
it
on the
was
windy side.
windmills.
Yeah.
Yeah, but they didn't move. They just sat there.
I'm sure they moved
So
sometimes.
I was just wondering if they started doing that stuff like in Hawaii and stuff.
Yeah, no, there's a lot of development of renewable energy going on in Hawaii, and batteries are actually a really big opportunity there too, because you can't predict when the wind is going to blow. You can predict better when the sun is going to be out. But yeah, I mean there are a lot of storage projects going in places like Hawaii right now. So it's
Power is so expensive in Hawaii too, so there's all kinds of experiments going on there. It's so expensive, it's amazing. I mean, you guys know.
You should have invested, Pat. You should have invested in those
I'm telling you,
windmills.
that thing was broken.
It was broken.
definitely a lot of maintenance too.
What's your projection going forward? Are you optimistic right now, or are you cautiously pessimistic, or do you feel that there's real opportunity?
No, we're optimistic. You know,
I'm glad you said that.
we're very optimistic.
That was the right answer.
Both about the business as well as the industry. Because solar energy, the cost of the equipment has reached a point where you're starting to see in California, in parts of the country, it's with only the federal investment tax credit, which will exist for the next 4 years or so. Today, projects are penciling that it works, and people are willing to invest in these. For the last, I mean, since before I joined the industry in 06 up to this point, you've had to have a lot of state incentives as well to make projects work. But it's finally reaching that crossover point. And that's exciting for us as an opportunity, because as it does reach that crossover point, the growth is going to be tremendous, but then it'll eventually be limited by the problems we're looking to solve. But it's also encouraging just because, you know, now that it's reached that tipping point, we don't think it's going to disappear as it did in the early 80s. And so in the early 80s, there was a lot of government investment to push solar energy and other renewables. But as soon as that support backed off, the industry pretty much fell apart.
Is that because the cost of everything is going to go down with the volume that's growing?
Correct,
Okay.
correct. And in the 80s, they never had that point where there was enough volume that the costs had dropped. You know, it was still early on the curve. Now we're at that point where, you know, over the next few years, in 4 years when the credit is gone, the industry should already be at a point where it's able to continue.
Is it okay to ask how much money are you trying to raise, and
Sure.
and how much money you're forecasting? Is that okay to ask?
Yeah, no, I mean, I'm happy to share. Right now, we're trying to grow the company to a head count of, I mean, we're currently six folks, and we'd like to grow the company to a dozen or maybe even, you know, a dozen and a half folks, and we're trying to raise about $1.5 million, ideally by the end of the year. And then we're looking to raise more money, potentially another $5 to $10 million in another 6 to 12 months, depending on how fast we need to continue to grow. And whether that's because competitors see the opportunity to try getting into the market, or because we need to develop technologies to, you know, to fully execute on our business plan. But you know, right now, for the company, we're looking over the next 18 months to raise potentially up to $12 million for the company. For projects, our goal next year is to install somewhere around 15 plus megawatts of projects. If you assume, you know, at least $1 per megawatt, we're looking for at least $15 million of project finance for next year, and then, you know, looking to triple them, you know, over the next several years, roughly tripling every year in terms of volume. So very steep growth rate.
That's convenient, $1 per megawatt.
I'm sorry, $1 million a megawatt, $1
Oh.
a watt. Yeah, $1 would be great.
Okay, that's great.
Would you be interested in employing a wounded veteran in some way, shape, or form if they had certain computer skills and stuff like that?
Absolutely, absolutely. You know, there's no question that I would hire a vet. You know, I mean, having been in the Air Force myself, always looking to.
Well, we've got some here, as Christina knows, that are off the wall smart when it comes to computers, so who knows?
Yeah.
That was great, excellent.
How
I'm not sure I
restructuring
understood
would
everything,
pay
but it
back
was
for
great.
the Company investments.
Well, we're starting
Stock.
out. Yeah, we're actually raising convertible debt initially, and the idea with convertible debt is that it's a debt note, so it accrues interest. But assuming we have a subsequent financing round, an equity round, so a venture capital A round, it would convert into equity in the company at a discount. So if the venture capitalist buys 20% of the company for well, say they buy 20% for $1 million. We hope it's more than that, but just for easy numbers. If the debt investors had given us $500,000, instead of getting 10%, they'd maybe get something more like 15% because they get a discount, having been early in and invested in us while we were young.
Dan, can you talk a little bit about why you chose convertible debt versus equity and things like that?
That's a good question. So the reason we went with the convertible debt round as opposed to equity is for equity you have to agree on a valuation. You have to say, the investor says, okay, I'm going to give you $1 million and I agree I'm taking 20% of the company. That means your company is worth $5 million after my investment. That's a tricky negotiation. I mean, right now we're
Who
6
knows
folks.
what you're worth.
Exactly. We'd like to think we're 6 bright guys, and we've got a $100 million company, but nobody's going to give us $10 million for 10% of the company. So to avoid those negotiations, which can really drag the company down at this stage, and we don't want to give away control. We don't want to give away half the company before we even get off the ground. That's why we went with convertible debt. Because it's a debt obligation. In the event of liquidation or something happening, the debt investor gets paid first, so they get their money back from the assets remaining in the company. But it gives them an incentive to give us money up front because they do get the discount to that A round once we do go out and raise more money from the venture capitalists.